Hey everyone. So I know I've talked about 50-year mortgages, but I just wanted to kind of like drive home the point that a lot of us will look at it on the consumer side because we're the usually the consumers of the house. Like we're going to buy the house, take the loan out. So a 50-year mortgage, it's a lot of debt, and even if it's like the same debt number, you're paying a ton more unless like your interest rate is like 1% or really 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 low. I usually butcher the word for this, but they're called amortization charts. Look them up online or just type in like mortgage calculator. They'll have them. They're great, and they don't go out to 50 years because that's ridiculous. Imagine getting a loan when you're 20 and then having it paid off if you made minimum payments by the time you're 70. So, what I wanted to point out is that I don't think there's a bank in America or like financial institution in general that would go for that. That is so much risk. Like it is so risky to do that. I mean, like the further out your timeline, the more risk. Because imagine your own life in 50 years. You're gonna have the same job. Like no, like I don't know, likely not. As like millennials and stuff, like I think it's an average of 2.5 to 3 years of holding the same job before they move to a new job. Like if you're giving out a loan and you're like, hey man, you gonna pay that back? And the guy's like, well, I'm in between jobs right now. And it's like, oh, okay, good thing I only made that loan for 50 years. No one's gonna go for that. And that's kind of the trap too when you go to buy a car. If you go and you're like, hey, I only can only buy a car, like I need to keep the number under $200 a month. Um, that's like a golden ticket for whoever you're buying the car from, because they're like, yeah, I'll stretch the loan out to whatever amount I need to get it to $200 a month or close to, you know, and you're in the long run you're going to be paying more because the longer you stretch out the loan on an interest rate, the more it's going to cost you. So that's really what it breaks down to.